Very excited for this next hour here with some great panelists. Excited to jump into the conversation, but before we do so, let's hear a little bit from David Chorba and Barry Mandanek on their backgrounds and their firms. David, why don't we start with you?
Yeah, thanks, Dave. Appreciate it. Good afternoon. Dave Chorba here with Delaware Funds by Macquarie, and a national sales manager for Delaware now. I've been with the firm 19 years, which is like 40 years in wholesaling years to be with the same company. And was initially the wholesaler for the Carolinas, and then was the Eastern Divisional manager. And then my boss, Brett Wright, made me the national manager about 4 years ago now. And it's been the only firm in the industry that I've been with, and so it's been a great 19 years, and hopefully another 19 in the future as well. Retail distribution, Dave, right? Managed mutual funds, separate accounts, and lastly in 2010 we were purchased by Macquarie out of Sydney, Australia, and Macquarie is known for private markets. Mainly, they basically pioneered the infrastructure asset class. And so we have a great parent that is resourcing us nicely in the field. One of the recent resources is our YCharts membership for the field team, and absolutely utilizing that to benefit the advice that we provide our advisors. So thanks, Dave. Good to see you today.
Absolutely. Thanks, David. And Barry?
Okay, Barry Mandanek here, and thank you for inviting me to the call today. I've been in the business for quite some time, started at Drexel Burnham back in the 80s. Did a variety of different things there, but in 89, when Drexel was winding out of lots of businesses, a few of us, I was one of them with Marty Zweig, bought the mutual funds from Drexel and started the Zweig Mutual Funds, which at the time was the only fund family dedicated to tactical asset allocation. We sold that company to Phoenix Investment Partners in 99, where I was there for a couple of years, and then joined UBS, where I headed up distribution there in the US for UBS Asset Management for about 13 and a half years. And I've been at Virtus, where I head up distribution for the last 6.5 years. So that's a quick overview of my career.
All right, great. Thanks, Barry. So we've got a few exciting topics to go through over the next few minutes here. First thing we're going to start with is around technology and some of the data and the tools that your teams and your firms are leveraging. Curious to hear about how that has changed maybe over the last few years, as well as specifically the last 9 months. Barry, why don't we start with you? Talk a little bit about the data and the tools that your sales team is using right now and embracing in this unique environment.
Yeah, thanks, Dave. The big tools in terms of engagement with FAs in a work from home environment, both for the FAs as well as our wholesale team. We use a lot of Zoom, a lot of webinar, some Microsoft meetings as well as very interactive tools, which I think the whole industry has basically, the revelation is that the technology is far better and easier to use than most had been aware of prior to the absolute need. Those are the big tools that we've been using for engagement, but content is what drives everything. As we all know, financial advisors feel like they need another product, like they need a hole in the head. So they're really, having good product earns you a seat at the table, but if you really want to, really get down to business, you need to bring something to the table that transcends product. And in our view, YCharts, and I'm not just saying that because you're on the call here, David, has been a real terrific tool for us to engage with FAs and to really delve into funds in a more meaningful way than we'd ever been able to do before. And doing it interactively with these tools, with the FA on the phone and sharing the screen data has been, it's really made it a seamless transition from visiting the offices to working from home. It's been great.
Do you feel that embracing some of those tools, one of them being YCharts, has helped shorten the sales cycle as well?
No doubt, no doubt. Because the material is easy to see and easy to understand. And it's one thing to have a conversation. It's another thing to be showing somebody charts that are visually compelling while you're speaking to it. You can really get to the heart of an issue very quickly, and get to the sale and get to the close rapidly because of that.
That makes a lot of sense. And David, how about you? How about your team there? Obviously part of a much larger organization with a lot of resources behind it from a global perspective. Talk a little bit about maybe how you've been using some tools to reduce the friction in these conversations, progress the conversations as quickly as possible with your great fund lineup you have there.
Yeah, definitely. Thanks, Dave. On the technology, I guess it's a dual answer. We talked a little bit about there's data. I think we're going to touch on data here a little bit later in the session. So I'll just kind of hit on the technology aspect of it right now, and then we can unpack the data further. One of the tools that we've utilized over the past year has been a video platform called Allego. We've enjoyed the benefits of Allego. You can think of it, if you don't have access to Allego or have not seen a demo, it's basically YouTube for your company. And it's nice to record portfolio managers, sales ideas, training, reinforcement ideas for new product. And so that's been helpful from a communication standpoint. Of course, we've gone down the road of Zoom and WebEx, fully employ that from an engagement standpoint. No doubt. And our recent acquisition from a tool standpoint has been YCharts. Dave, when you and I caught up at a conference a little while ago and you walked me through that, I was just salivating at the functionality of the tool. And I almost decided, I was like, man, I could go back into wholesale and back into the field and carry the bag again with this tool. Almost. So, but it's so powerful. That's how powerful it was. That's how really, I really think forward-looking the tool was, right? It really is something, and I'm just looking at it from the wholesaler lens, not even how the advisor can use it. So it's been helpful to us from a standpoint of utilizing empirical data to tell a story, right? And that's really what it allows you to do. It allows you to tell a story, and you don't really think about how you can utilize numbers and upside downside capture and what the 10-year was doing in 1973. But it can craft a narrative, and it can craft a story, and you can customize it. And so we're just on the front edge of that and really unpacking all the functionality around it. This is probably going to sound like a YCharts commercial, and it's not meant to be, but yeah, I would say that's been the most recent update that's been highly impactful for the team right now. And we're always looking, right? We're always looking for new tech, new technology ideas. There is no finish line for efficiency that technology can deliver.
Why don't we keep going here, kind of from the data perspective? I'm curious, David, you may as well kind of start, and then Barry, additional comments that you might have in regards to the changing landscape. You both have been in the industry for a long time. I think you've probably seen it evolve. Obviously, you mentioned, David, the joke there of almost wanting to go back to carrying the bag. With that data that you have now at your fingertips, with the tools, I'm sure you've seen an evolution from the days of steak dinners and rounds of golf to more analytical conversations. Do you feel like that's fully transitioned, or is there still room to go there? And what do you think about that?
It's there. The seed's been set, no question about it. It's there. You have to provide value. You have to provide capital markets insights. You have to provide, just world-class service just to compete. Yeah, to your point, you just needed a 3 handicap and a love of bourbon, right, to succeed in the past, and that's just not what people are looking for, and we know that. And I think colleagues on the phone, we're rapidly training the team to understand that and trying to provide them the tools and the education to really square off against truly institutional caliber advisors. I mean, these teams now, they have CFAs that are running portfolios, and it's not about the latest hot dot as they say. So I'll let Barry jump in here as well, and then we'll kind of get to the disparate forms of data that are available out there as well for us.
Yeah, no, I'd echo what you said, David. Perfect. And as we all know, financial advisors don't get paid on sales for the most part. They get paid on delivering better client outcomes. And so it's imperative that you really take a full disclosure approach to the way you position investments that you're presenting and where they fit in a portfolio, and not only how well they've done, but also the pockets of pain or the price of admission, if you will, the periods where it's been most difficult to own over the period of time, say the last 10 years. So, for a fee-based advisor who recognizes that the key to their success is a book of clients that are achieving their objectives and goals, the ability to go through a narrative about not just how well the fund is done, but the ride that you needed to take to actually achieve the results that the fund has provided is every bit as important. And given the analytics that YCharts brings to the table, and as David notes, the types of people that each FA team has, some are more analytical and CFA based, having all that data at your fingertips to go through that is very, very helpful.
That's great. Thanks for those insights. So let's talk a little bit about the data. One of the unique data points that YCharts has is around fund flow information. And that's something that we found most sales teams have been very interested in. Barry, why don't we start with you here? So specifically, YCharts is pulling in fund flow data that's updating monthly, allowing both wholesalers and management to understand which categories and which specific funds are seeing inflows and outflows, mutual funds, ETFs. Talk a little bit about how your team might leverage that fund flow data.
Yeah, it's actually a phenomenal tool. I use it first to humiliate my wholesalers when I find an area that we have a very compelling fund and there are competitive funds that don't have what I would see as an equal value proposition, attracting a lot more flows. So it's extremely useful for anybody who's looking to humiliate their wholesale team. But in all seriousness, it's great for opportunity spotting. It's great to see emerging trends in certain categories. It's great to look at individual funds and then dig down to see why they're achieving their success and contrasting that with what you're doing, and all of that. So I'm also, I'm a big fan of noting the path of least resistance is often a ticket to the least attractive client outcomes. So sometimes I'm wary when I see big flows into certain categories. It makes me want to think about doing work in some other categories that aren't experiencing as much flows. But there's just a myriad of ways to be doing this. But for me, I love the big picture of seeing what the industry is thinking about, where the interest is going, what's being left for dead, and trying to figure out why that's happening and seeing if that's an opportunity or is that something that we should just continue to, relatively underplay or ignore. So it's a great tool. And also, by the way, there are certain funds and certain asset classes where fund size and flows become an issue in terms of being able to execute against the strategy. So if you have a small fund that has capacity availability and you're competing with funds getting big flows, but maybe at a size that they no longer can execute the same type of strategy that they had when they were performing so well, there's all kinds of windows that you get from the flow data that I think is exceedingly helpful.
Yeah, those are all great points. David, anything you'd add there? Maybe also thinking about looking at categories and funds that are losing assets and opportunities that presents for your team?
It absolutely does. Yeah, no question about it. It's the ability to create a contrast, right? It's never a me too story, right? And so when you can demonstrate, again, through just kind of an empirical delivery, a very user-friendly delivery on, why this fund is performing as it is through attribution and how you can compare or contrast that to one of your existing solutions. It matters, right? It helps. There's another component of this, which is actually interesting, and it's not client-facing, it's actually inward-facing. A lot of us, at least in distribution, we have a lot of different portfolio strategies that we represent. and get asked for the time and attention of our professional investors. And it's impossible, right, on a week-by-week basis to be all things to all people. And it helps to educate our firm as well on what asset classes are receiving flow, right? If you're in an asset class that's massive net redemptions, right, it's a better conversation to be equipped with the data to talk about realistic expectations from a flow standpoint, right, versus just assuming all things are equal, we should just sell everything all the time. Well, that's not the way to approach it, right? So we do have a focused distribution strategy. Certainly utilize industry flow data to help accompany that. And lastly, it goes to education of the advisor, right? And in many cases, the advisor is busy running their business and talking to clients, and may not have any idea what the 10-year has done, right? Or what their short-term bond fund is doing or whatever. And so being equipped with that standpoint, just to kind of level set, it all goes to just trying to provide quality service to the FA relationship.
Yeah, absolutely.
I might add one other thing, David, which is I find it fascinating. A lot of times when I was just looking at fund flow data, I would conclude that the fund category was way out of favor. But when you break out the ETF flow data from the fund flow data, which you do so nicely, a lot of times you're seeing fund flows leaving open-end mutual funds and going to ETFs. So you see the redemptions from the mutual funds with corresponding inflows to a like ETF. And that gives you the kind of information you need to know how to converse with an FA that might be redeeming your fund. It may be going to an ETF. And so being able to contrast the strengths and weaknesses of an ETF approach versus the mutual fund, that's illuminating as well.
Yeah, that's a great point. A lot of times we'll see in those reports the headline number indicates one large directional move, but when you break it up between mutual funds and ETFs, they actually can have flows in different directions. So thanks for mentioning that. David, let's go back to you with a little more of a data question. And this speaks to the time of year we're at here as we approach the end of the year. I will say, having been an advisor myself for 4 years before YCharts, I understand this time of year is popular for tax conversations, a lot of tax loss harvesting opportunities that are out there. YCharts has a lot of metrics related to taxes and potential capital gains and so forth. Maybe just talk a little bit about the conversations that your team has with advisors that are unique at this time of year around tax.
Yeah, it definitely a popular time of year, no question about it. Wanting to take advantage of our gloriously simple tax code where we can, right? Two things. Like, one thing that immediately comes to mind when you talk about taxes, and we all know the adage, it's not how much you make, right? It's how much you keep. But one of the things that is useful when, again, for those of us in distribution, when you talk to your product managers, sometimes it gets overlooked, but to find your associated strategies or mutual funds that might have embedded losses. Maybe you merged a couple funds or you have a new team or whatever, and all of a sudden you realize you actually have embedded losses in the fund, and the fund is a tax-free fund. So that's something to be aware of, just from a standpoint. Make sure you know your internal lineup exceedingly well from a gains standpoint. Number two, also know which of your funds are paying out big capital gains and why, and be prepared to answer why. What were the 3 or 4 transactions that occurred? Maybe it's, again, a new portfolio management team that's on that front. When you see that, when you see PM turnover, you see a portfolio turnover, you're looking at the possibility, right? The possibility of some large capital gains being paid out, which goes to the conversation and educating the advisor on what they own. If you're so fortunate enough to have a relationship with the advisor where they provide you their matrix, and he or she gives you the matrix, and then you can start doing your homework on understanding positions, understanding the portfolio, knowing their performance characteristics. And lastly, to your point, Dave, on tax loss harvesting, finding those funds that might be underwater, right? A handful of international funds this year are challenged and struggling, right? A couple of the small value teams have really kind of struggled. And so the opportunity to go in and position either a complementing strategy or a replacement strategy to book a loss to offset gains, because there are a lot of gains in advisors' books. And the snapshot that you get in YCharts, it educates you and the advisor to know why to create those trade, why to make that trade, why to create that trade, the conversation to have with the advisor to be proactive. Wait a minute, you're telling me we're down 15% in this fund and we're going to sell it right now? Yes, that's exactly what I'm telling you. And this is why we're doing that, because I've got 52% taxable gains over here that I've got to try and offset. And so when you're equipped to tell that story, right, it goes way beyond just trust me, right? It goes, here's the reason and the rationale behind that. And so, yeah, right now is the time to be proactive on that. If you have those, the knowledge of the funds that are underperforming in the advisor's books, you're not going to churn for churning's sake. But if it does make a taxable strategic reason to do so, then by all means have the conversation.
Absolutely. And we did have one question come up while I have you, David. Somebody was asking again for the name of that video recording software that you mentioned earlier.
Oh, yeah, Allego, A-L-L-E-G-O, Allego.
Okay, great. Thank you.
Sure.
Barry, anything to add from the tax perspective? Otherwise, I've got another topic for you.
No, I'm good. Thanks.
All right. So at your firm Virtus there, Barry, and on your team, you guys have rolled out YCharts pretty much to everybody, which we appreciate. The question I have for you is around collaboration. I think one of the benefits we've seen with YCharts is the ability to create content within the tool and then share it with one another. I'm curious from your perspective of senior leadership, how you think about collaboration across the team, and also how you think about wanting them to maybe deliver a consistent message, whether or not the home office is helping craft that message and the communication around a particular fund, or what specific funds you may want to focus on now. Just talk a little bit about what that collaboration looks like across the team.
Yeah, thank you. The share function on YCharts is a great opportunity to look for best ideas, best practices, and share them broadly with the entire wholesale team. We do that quite a bit. So first of all, I will give credit to Kyle Gears from your firm, who's been a tremendous asset in training our folks. He's been incredibly patient and very diligent and very responsive. And he's been absolutely essential to the whole process. But in addition to that, we try to lead through the sales desk, our internal sales desk. We have a few folks in particular that are real, I kid with them that they have their doctorates in YCharts, and they're just passionate and they love it. And not only are they teaching their own external wholesaler the ins and outs and lead the conversation often with a Zoom call, they will lead within the sales desk, and we have lots of Zoom calls, even though people aren't physically getting together right now, where we're sharing these best ideas as well. We do our Friday wholesaler calls, and we look for best ideas, and usually a topic on many of the calls is what's your favorite YChart and why, which funds are you using and why, and how are you contrasting it, and what is your narrative alongside of it. So we do that quite a bit too. So we collect the best ideas, we put them in the share function of YCharts, and then we actually just routinely, repetitively promote it with our sales teams on various calls that we're doing, having people kind of drill for skill, if you will, put them on the spot and have them speak to that particular chart unannounced, so that everybody has to come prepared. And that's how we spread it. But I would say the sales desk has been integral to spreading out the training and making sure that there's usage throughout the organization.
That's great. And David, how about from your perspective? You guys are a little newer to YCharts, but as you've rolled it out to the team members, where have you seen some opportunities to collaborate and maintain focus among the team members?
Yeah, definitely. And I'm going to steal that from you, Barry. Drill for skill. So I'm going to go ahead and I'm going to grab that from you right now. Just letting you know.
Yeah.
Without question, everything Barry said, awesome. Sharing is great, right? You can have one part. You always have the maven, right? You always have that one maven wholesaler that just devours the tool and is so creative and so functional with it. And what's nice is just the ability to share that across the team. I think one of the things that also is worth mentioning is this has been an interesting year in capital markets, as every year is. But there have been a lot of individual stock stories this year, right? People, they want to know what's happening to Tesla, or they want to know what's happening to Amazon. And it's been a very individual stock story this year. So the ability to enter each of your individual securities in your funds, right, and then understand any key newsworthy items, key insights, key movements, right, again, to talk about a story, right? What's going on with COVID, and why did Disney pop this week with the talk of a vaccine? And the ability to show that to the advisor and understand it's a holding, it's up 13%, here's the narrative behind it. So it just goes to an extra level of education and understanding about your solutions that you position to the advisor and the why behind it. And then lastly, being able to just get down to the security level, right, and talk about attribution and talk about what's going on, not just broadly, well, hang in there, invest for the long term and everything will be fine. Yeah, we're kind of past that. We're kind of past those days. We have to have an answer and understand what it is, and having that security attribution really is a useful tool within YCharts as well, Dave.
That's an interesting comment, because I imagine it hasn't always been like that, talking about individual securities within a fund.
No, it's really, and that goes what Barry and I were talking earlier. Like, your team needs to become better. Do you think the institutional representative at BlackRock knows the story behind every security in that separate account? Absolutely, 100%. They're probably in on those those team management calls. So if that's the standard, that's the standard, and we've got to work to that and train to that, right? In an industry that's ever competitive, trying to differentiate. And this is what we're talking about as far as doing it differently and upgrading your talent and upgrading the knowledge base and the knowledge set to do so. And that's what Barry and I are trying to do to the team, is give them the tools that they need to have that institutional caliber conversation.
And Barry, maybe piggybacking on that a little bit, in addition to the single stock conversations, maybe talk a little bit about how your team members are also incorporating economic data. I feel like every day there's conversations around treasury rates or Bitcoin or COVID data, price of oil or other commodities. All that information is kind of now at their fingertips. Do you feel like that has become a larger part of the sales process than it used to be?
It is definitely part of it. You have to be very much up to speed on current events and how things are affecting markets. People are, as they say, drowning in information, and a good wholesaler is trying to create wisdom out of the information and try to make some sense of it. So absolutely integral part of the conversation.
And while I have you, Barry, let's go to the next topic, which will be our final topic, around 2021, what to expect. We could talk about the markets, but I think it might even be more interesting to start with the wholesaling landscape. Have you seen certain firms allowing meetings right now? It feels like, at least in Tennessee, I've heard of those happening with certain firms. What are you seeing out there now? What have you heard through the grapevine, and where do you see 2021 starting and going as far as resuming some normalcy with in-person meetings and other conversations?
Yeah, I don't have a crystal ball on that. I'm seeing some encouraging signs, obviously, but in our minds, I think most of us are under the assumption that, for the most part, normal business isn't resuming much before the end of the first quarter, if not the first half of next year. So the commitment to work from home, Zoom, meetings, technology, and doing all the things that we've been doing this year, I don't see that abating anytime soon, truthfully. So as a consequence, being able to talk, like you mentioned earlier, about how the landscape may be changing in 2021 and beyond, nobody knows what the future holds, so we're big believers in diversification. But one of the things that we talk about quite a bit at Virtus is that the ride matters, right? So it's not so much which funds you buy, it's what you do with the funds after you buy them. And YCharts, to me, allows you to transcend the traditional conversation about year-to-date, 1 year, 3 year, 5 year, 7 year, 10 year return comparisons, and really work those tables and talk about, many people are of the belief that the next 10 years, last 10 years were a lot about liquidity being from central banks, be it the global financial crisis and then COVID. And the next 10 years may be one where you don't have the rising tide lifting all boats as much, and that you may have a phase where you're digesting a lot of those moves that took place. So many advisors that we speak to are considering higher volatility, more dispersion among asset classes, and not the markets that we had over the last 10. None of us know what will happen, but that's prevailing conversation. But I find when we go through the YChart tables about 2021 and beyond, the conversation is oftentimes shifting towards upside downside capture, maximum drawdowns, things like Sortino and Sharpe ratio and things like that. When you're in the fixed income world, they want to spend time looking at the credit ratings, and you guys lay that out so cleanly and so tightly. So financial advisors, I think, are recognizing that active management is effectively risk mitigation. And so being able to so cleanly and easily, with a few clicks here and a few clicks there, demonstrate those aspects, I think going into 2021 will be increasingly important for all people who are trying to help advisors get people from where they are to where they need to go.
That's great, Barry. Thanks a lot for that. David, how about you? What do you see right now with the team from a meetings perspective? What do you see going into 2021?
Yeah, sure. And let me I'll backtrack here 1 second. The one thing that Barry mentioned on the prior topic that I think is very useful to point out is, Dave, I forget the number. It's 200,000 or 250,000 separate data points, independent data points, right, from capital markets data points sourced from, it was a government data. What's the source of those data points?
Yeah, we've got north of 300,000 economic indicators, I think you're talking about, and those will come from the Federal Reserve, the Treasury Department, Johns Hopkins, COVID, pretty much anybody that's out there publicly available.
Yeah, and so to take that, so if you wanted to, I don't know, let's just say, for example, let's say you have a portfolio manager, and what's interesting about our firm is we don't have a macro economist. We don't have a central view, right? You can think of us as a collection of boutiques. So let's assume that our taxable fixed income portfolio manager says, you know what, we're finally seeing a lot of this money printing getting into the hands of people, which is starting to create a currency, right? An increased turnover of money, right? Of M2 in the economy, which will eventually result in inflation. Okay, great. Now let's go back and look at YCharts. Let's grab a snapshot of all those inflationary periods. Let's take a snapshot of what the 10-year did during those inflationary periods. And lastly, let's overlay that on the performance of either an ETF or a fund, right? And you, Dave, I don't know if I'm stealing your thunder or not, but you guys are about to add separate account data as well, right, to the YCharts database, which is outstanding. And so all of a sudden you have the ability to take, a theme, right, or a point of view from a portfolio manager, backdrop that against historical market performance, and lastly, be able to set the stage for realistic return expectations on an asset class, right? That matters. I think that makes sense versus kind of the wet finger in the air. Well, we just don't know. Well, you know what? You have to have a point of view, and you have to make some assumptions about what's going to take place, right? You have to have a point of view. Whereas our small cap growth team is the most bullish portfolio manager team I have seen in the marketplace yet. They are absolutely screaming bull right now, and because they're talking about technological disruption, right? Better, cheaper, faster, better, cheaper, faster, better, cheaper, faster. Look at the companies that have outperformed. What are they doing? They're disrupting industries, and they're doing it better, cheaper, and faster. So that's our small cap growth team is just pounding the table on this is bull. And whereas I can flip to another portfolio manager that talks about stretched valuations. We talk about mean reversion. Right, so this is great, right? To utilize a tool because the tool's independent. The tool doesn't care, right? We just utilize the aspects of the tool to create a narrative and craft a narrative, right? And show the data behind it, which is helpful. Plans for 2021? Yeah, COVID, we get a vaccine, we go back to wholesaling like normal, and this never happened, right? I don't think that's the case. I don't think that'll ever be the case. I'll give you an example. Like we were, it's holiday season. We want to send out holiday gifts to our top clients. Well, guess what? They're all working at home now. We used to always ship those to their branch addresses. We don't have their home addresses. We have no idea where to send these presents, right? Which goes to that concept of data. What can you do to increase your data? Sometimes your most important data is your internal data. Maybe now we get home mailing addresses from advisors, so this can happen, because I'm not going to be traveling as much. I know people in my company aren't going to be traveling as much. I assume the advisors are not going to be in their branches as much either, right? And so that's just one small data point. We have going into this year, we actually get a chance to plan twice. Our fiscal year is April to April, so we have to business plan with all of our advisors who have a calendar fiscal. So we go into January, right, already planned up for what we're going to do with them. And then secondarily, we've got to throw that second business plan for our company, which goes April to April. But what we're doing right now, without question, is tying as tightly as we can to our firm the existing relationships we have. The one thing that has become painfully clear in this COVID world, this remote world, is if you don't have a relationship now, good luck establishing a new one. It's going to be a challenge. It's going to be hard. As a firm, we've got to continually provide insights, provide value, provide actionable ideas, provide points of view, and service it and be there behind it and be able to kind of stand shoulder to shoulder with the advisor if we do have performance hiccups, right? And not being a ghost in this era, because we all know there's a 7 basis point sitting there waiting to eat your lunch every day. I mean, that's what scares me, right? What am I doing to outperform, right, that ETF? What is the team doing? What can we provide over and above the ETF, right, in this going forward world? Lastly, and I'm just going to steal the quote from Ed Easterling. I don't know if people might be familiar with Crestmont Research, great website, tons of awesome charts as well. But the one thing that you can do to increase return and decrease risk 100% of the time is rebalance. I think in a marketplace where there's a lot of uncertainty, you don't know, rebalancing, and perhaps even more frequently, and showing the evidence around rebalancing makes a ton of sense, right? It makes a ton of sense. They say in bull markets you don't rebalance, in bear markets you want to rebalance often. Don't know which one it is, but have a point of view on what that looks and feels like. So those are some things we're thinking about going into 2021, Dave.
Those are great topics. Thank you, David. One final question that did just come through around the SMA data. So the answer is yes, we do now have SMA data in YCharts that was released about a month ago, covers the full universe. Barry, this individual was asking the question about how that SMA data is integrated into YCharts and how maybe wholesalers are leveraging it. I'll ask you, Barry, since I know you've rolled that out for a majority of your team members, how are you leveraging the SMA data right now?
For me, it's a little early to have an informed view. We're really in the process of rolling it out now. But the SMA world for us is an integral part of our total business. It's 21% of our assets, and our SMA sales are up significantly year over year. So more and more of the advisors we work with are doing both mutual fund and managed account data business. They want a manager that they like, that they can offer in both mutual fund and SMA format. I anticipate using YCharts for the SMAs just exactly as we do for mutual funds, which is to drill into sectors, let them see where the overweights, the underweights are relative to the benchmarks and peers, and to showcase, as we talked earlier, the ride. Going back, a lot of the SMA data, which is great, goes back further than a lot of the mutual fund data does, because you're using the institutional records. And it affords you an opportunity in many instances to show multiple market cycle performance as opposed to shorter term performance that might have happened in a more recently seeded mutual fund. So We're in the early stages of laying it out, David, but that's exactly how I anticipate using it.
That sounds great. Well, thank you both for your time. I really enjoyed this conversation and the opportunity to spend some time with each of you.